to this live video. If we haven't met before, I'm Jo Violetta from Violetta Finance, and I want to talk to you about the recently announced $25,000 home builder grant. I'm going to explain what it is, who it's for, and who it's not for, and how to apply for it. So what is the $25,000 home builder grant? Well, it's part of the government's COVID-19 or coronavirus stimulus package. And what it will do is it will provide eligible owner-occupiers, and that includes first home buyers, but not limited to just first home buyers. It will provide them with a grant of $25,000 to build a new home or substantially renovate their existing home. And I'll go and explain what they mean by substantially renovate. Now, unlike the first home loan deposit scheme, there's no cap on the number of grants available. However, there is a time limit. So let's take a look at that time limit. The contract for the build or renovation must be signed between today, so the 4th of June 2020, and the 31st of December 2020. So there's your time limit, and construction must commence within 3 months of the contract date. Now, it's also important to note that the home builder grant is non-taxable, so similar to the first home owners grant, that is also non-taxable. And as I mentioned, you don't have to be a first home buyer to be eligible for the grant, but if you are a first home buyer, it will be paid in addition to the first home owners grant, and you can also use it in conjunction with the first home loan deposit scheme. So lots of help available for first home buyers. So who's it for? Well, the government states that you need to be a natural person. So what does that mean? Well, basically you can't apply for it as a company or a trust. You have to apply for it as a person. You need to be 18 years or older, and you need to be an Australian citizen, and there are some income caps applied to it as well. So let's take a look at those. If you are an individual applicant, so you're applying as a single person, then your income needs to be $125,000 a year or less, and that is based on your 2018-2019 tax return or later. Or if you are part of a couple, then it's $200,000 per year combined. Now, there's also a cap on the property value as well. So the property value, including land, cannot exceed $750,000, and that is for a build. Okay. If you're looking to substantially renovate your existing home, and it's going to be your principal place of residence, so the place that you live, the renovation contract needs to be between $150,000 and $750,000, and the value of your existing property cannot exceed $1.5 million. So for a new build, house and land cannot exceed $750,000. For a renovation, the renovation needs to be costing between $150,000 and $750,000, and the value of the existing property cannot exceed $1.5 million. And it applies to all dwelling types. So that means it applies to, for example, houses, apartments, house and land packages, off the plan, etc. Okay, so who is it not for? So basically, it's not for anyone who doesn't fit into the eligibility criteria, meet the eligibility criteria, I should say, that I just spoke about. And so that would mean it's not available for investment properties. So if you are looking to, flip a house or renovate your house to then use it for investment purposes, it doesn't apply to that. Now, I haven't got any detail yet. Nothing has been confirmed around, well, is there a certain amount of time that you need to live in the home after renovating it for it to be considered not for investment purposes, for it to be for owner-occupied purposes. I think there's a few grey areas there that we might need a bit more clarity around. It's also not for owner builders. So owner builders who want to build a new home or renovate their existing home will be ineligible for HomeBuilder. And again, if you're wanting to build a new home or, as I said, renovate an existing home as an investment property, then you'll be ineligible for HomeBuilder. The other sort of who it's not for is it's not for, so builders can't artificially inflate the contract price. So the government states, I'm going to read this verbatim, the terms of the contract should be commercially reasonable, and the contract price should not be inflated compared to fair market price. So you can't, be going, oh, it's a $130 reno, but we're going to boost it up artificially to $150,000 so that we can get the grant. It can't work that way. The renovations or building work need to be undertaken by a registered or licensed building service and named as a builder on the building license or permit. Now, it's also not for swimming pools. I'll explain what I mean by that. So if you're doing renovation works on your existing home, it must be to improve the accessibility, safety, and livability of the property. So it can't be used for additions to the property like swimming pools, tennis courts, outdoor spas and saunas, sheds and garages unconnected to the property. Now, how do you apply for it? So you should contact your relevant state or territory authority on when and how to apply for HomeBuilder. So in Victoria, for example, you would contact the State Revenue Office. So if you're in another state, what you want to do is think about who administers the first homeowners grant in your state, and that is, my understanding is, that will be who is going to administer the HomeBuilder grant in your state. So you would apply directly to them. Now, from my research, and this hasn't been confirmed, it looks like your bank or broker can apply for it on your behalf. So similar to what Carl does for our first home buyer clients, he applies for the first home owners grant on their behalf. So he applies to the State Revenue Office. This needs to be confirmed, but from what I'm reading and researching, I think that's going to be the case. Now, when you do apply for it, the State or Territory Revenue Office will require certain documents to process your application, and the documents that they will require have not been confirmed yet, and it's likely it will vary from state to state. So we've got to wait for the government of your state or territory, so where you live, to sign what's called the National Partnership Agreement with the Commonwealth Government. So once they sign that, it'll start rolling out in the states and territories, and there should be more information about the documents that you need. But it's expected that you will need these kind of documents as a minimum. I'll give you a bit of a list. Proof of identity, a copy of the contract, so the building or construction contract, dated and signed by you and the nominated, registered or licensed builder. Now, so the states haven't signed that agreement yet, but say you signed a contract today and your state or territory doesn't sign the agreement until next week, it can be backdated to today, so don't worry about that. You'll also need a copy of the builder's registration or license, a copy of your 2018-19 tax return, and you'll also need documents like council approvals, building contracts, or occupation certificates and evidence of land value. So that is how to what the Home Builder grant is, who it's for, who it's not for, and how to apply for it.